Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Simon Mott, Chief Marketing Officer with TrackInsight, to discuss trends in the ETF market, particularly as they've been impacted by commodities and, of course, geopolitics. Simon, it's great to see you again. Welcome back to Trade Talks.
Thanks, Jill. Nice to be back.
And volatility, of course, is back. And what have ETF investors been experiencing, and how have they been navigating the market?
Yeah, volatility is back. In fact, it's back with a vengeance. I think the one thing we can highlight here is that the top performing ETF of the year is the ProShares VIX short-term futures ETF, which is up nearly 61%. So if you look at that, the fear gauge is telling you everything you need to know about the markets, which are getting whipsawed by a variety of different factors, including, of course, the Russia-Ukraine crisis, also China, activity in the energy markets, activity in the crypto markets, activity in the commodity markets. So investors really are facing an incredible amount of different impacts on the market. What we're seeing from a sector point of view, Jill, at least as it pertains to ETFs, is that very few sectors are up year to date. Only energy and materials, which are emerging as a significant theme for 2022. However, the flows tell a slightly different story, and ETF flows have been consistently strong, and we're not seeing that stopping. But a couple of sectors are experiencing some outpourings, particularly in the real estate, in the consumer sectors, and in the IT sectors. So there's a degree of profit taking here potentially, but investors certainly are moving away from some of those more kind of volatile, cyclical sectors into a more defensive position overall.
With geopolitical concerns driving markets down, are there any bright spots for investors?
Yeah, well, it's a fascinating kind of period to be involved in the market, and as many of those who are doing this day to day will know, there are not many bright spots out there over 2022. Now, here at TrackInsight, we don't just look at the traditional sectors, we also look at emerging investment themes, and we track about 70 of those. But what we're seeing is only 4 are in positive territory year to date. Those being nuclear energy, which is up around 13%, natural resources up around 12%, energy infrastructure up about 11%, and agricultural agribusiness up about 5%. So this is really telling you the story of today's world, which is the focus really is on energy, resources, and food. And obviously, the impact of the conflict in Russia and Ukraine being considered the breadbasket of Europe, both countries being huge commodity suppliers, is having a huge impact on the market. So concerns around supply chains, stability, securing future food supplies, and also securing stable energy supplies in future seem to be top of mind for investors, and certainly the performance is reflecting that.
Right, and let's talk more about that. As huge commodity producers, the war between Ukraine and Russia is having a huge impact, to your point. How are ETF investors reacting, and what can they expect next?
So in these types of volatile periods, Jill, we often see a flight to safety, and certainly that's playing out in the ETF markets currently. Gold, obviously, often seen as a safe haven during troubled times. And we've certainly seen that play out. There's been over $11.5 billion of flows into gold ETFs so far this year. Gold's up around 6% this year. So, you know, the money's been making the right decision. And even this week, where gold is, you know, maybe slightly off, we're still seeing inflows as possibly that kind of fear sentiment and that increased need to have safety and volatility protection in the portfolio kind of plays out. If we look at one of the other main commodities that's been moving this year, and obviously there's been a lot, the nickel markets have been very active, the palladium markets have been very active, both in the physical sense and also in the ETF markets. Let's look at uranium. Uranium's being positioned as a fuel source for the future. Nuclear energy is back on the radar for a couple of different reasons. One being obviously the insecurity of traditional energy supplies highlighted by the Russia conflict, and also concerns around the capacity of green energy suppliers to fill the void. So uranium's certainly on the radar. We've seen year-to-date performance up around 14.5% and around $600 million of flows into uranium ETFs. And even over this week, that trend continues. Uranium virtually flat, but we're still seeing inflows. So what does the future look like? Well, if the geopolitical situation kind of continues, we can expect continued kind of volatility. There is clearly supply problems with the recent outbreaks of COVID in China. There's also now demand concerns on industrial metals and others. So we're in for a wild ride. It is St. Patrick's Day, Jill, as you know, so we should hope for the luck of the Irish, and that hopefully we catch a leprechaun and find some gold at the end of the rainbow, because right now, markets are really moving up and down, and there doesn't seem to be, a huge amount of direction this year outside of those core themes of energy and resources.
Yep, that's a great point that you make. Just to see the swings and round trip on the same day are really quite astounding. Simon, great to see you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.